Okay, so unless you live under a rock, forgive the pun, BlackRock is the most influential entity in the world. They're more influential than the United Nations, the International Monetary Fund, the EU, even the United States of America. And let's just all agree that BlackRock is the source of an awful lot of the evil in this world. But listen, since they are so influential, the comments that they made just a few days ago about Bitcoin should make everybody sit up and take notice, whether you're in Bitcoin or not. Okay, so in this video, I want to talk to you about what this means for Bitcoin specifically and for the crypto market as a whole. So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Everett Anderson. And this has been a big news week for Bitcoin. And there's plenty here that you really need to know about. So let's dive right into it. Okay, so out of Forbes, BlackRock reveals it's quietly preparing for a $35 trillion Federal Reserve dollar crisis, with Bitcoin predicted to spark a sudden price boom. Okay, you don't get a more dramatic headline than that. Okay, so right now, as I'm recording this, it is September 22nd, 2024. And for the sake of posterity, let's take a look at where Bitcoin stands at the moment. Okay, so Bitcoin is standing at 62,600 with a fully diluted market cap of $1.3 trillion. Now, this is the one-year chart on Bitcoin, and you can see that since late February there, it is bouncing between we'll call it 70,000 and 60,000 range. So from a technical point of view, I want you to watch for this 73,000 level. Once it clears that level, then we should be off to the races pretty dramatically. All right, so let's go back to that article. The Bitcoin price has climbed to over $62,000 per Bitcoin, with traders now turning to a China shock and awe earthquake after the Fed surprised traders with a 50 basis point cut, kicking off what's expected to be a fresh liquidity cycle that could put the Bitcoin and crypto markets on the cusp of a major move. So now I want to get into the meat of this presentation, and that is the official report that BlackRock put out on Bitcoin. This is a very detailed report. We're not going to go over all the details, but I'm going to pull out what I think are the salient points for you to know about and to consider. The title of this report, Bitcoin, a unique diversifier. Why Bitcoin's appeal to investors lies in its detachment from traditional risk and returns. Okay, so as I dive into some key details about this report, I want you to keep in mind that just a few years ago, in 2017, Larry Fink, the CEO of Bitcoin, was insulting and disparaging Bitcoin holders as fast as he could. Okay, he did not believe in this product. He thought that it was a scam. But now, not only are they on board, they are really on board. Not only do they like Bitcoin, but they want to control Bitcoin. But let's not get ahead of ourselves. Let's talk about the report. Detailed analysis of how Bitcoin performed in the face of major geopolitical events. And look at the events that they refer to here. The US-Iran escalation, the COVID breakout, 2020 US presidential election, Russia's invasion of Ukraine, US regional banking crisis, and most recently, the yen carry trade unwinding that happened about a month and a half ago. And the column I want you to focus on is the one here on the right. The 60-day returns, after those events. And it compares it to gold and the S&P 500 in the stock market. And look how it fared. I mean, Bitcoin performed, brilliantly in the wake of all of those dramatic events. So right away, you can see the argument that they're going to be making here, that historically speaking, Bitcoin has outperformed every other asset class that they refer to in this report. Now, this next point really got my attention, because about my feelings about the US dollar and how the US dollar is in crisis mode, and the US dollar is at risk of becoming obsolete, and that the US dollar is under attack. Well, look what they say about the US dollar and why they see Bitcoin as an antidote to the decline of the US dollar. Okay, so this slide refers to the accelerating US debt growth. Okay, so there's a shaded yellow area here. This refers to the U.S. gross federal deficit in the trillions. And you can see, now you got to kind of look at this upside down, right? It is accelerating. And the red line there refers to the U.S. deficit. Okay, and this is the key takeaway from the report, in my opinion. Bitcoin, as the first decentralized, non-sovereign monetary alternative to gain widespread global adoption, has no traditional counterparty risk, and it depends on no centralized system and is not driven by any one country's fortunes. These properties make it an asset that is largely detached on fundamentals from certain critical macro risk factors, including banking system crisis, sovereign debt crisis, currency debasement, geopolitical disruption, and other country-specific political and economic risks. Phew, wow. I mean, that's a mouthful, but boy, that is so poignant. But for us who are crypto fans to begin with, we're all saying, duh, where have you been? But to hear BlackRock say it is, really puts an imprimatur on it. So BlackRock views Bitcoin as an antidote, as an answer to the debasement of the US dollar and the financial risk of the world financial system going to pot. They see, I don't know if I use the word immune, but they see it as a very clear alternative to traditional financial assets. That is a huge, huge statement. And this is their conclusion from the report. While Bitcoin has shown instances of short-term co-movement with equities and other risk assets, over the longer term, its fundamental drivers are starkly different and in many cases inverted versus most traditional investment assets. As the global investment community grapple with the rising geopolitical tensions, concerns over the state of the U.S. debt and deficits, and increased political instability around the world, Bitcoin may be seen as an increasingly unique diversifier against some of these fiscal, monetary, and geopolitical risk factors investors may face elsewhere in their portfolios. Let me remind you of the headline in that Forbes article. BlackRock reveals it's quietly preparing for a $35 trillion Federal Reserve dollar crisis, with Bitcoin predicted to spark a sudden price boom. Is all over Twitter now. Everyone knows about this report right now. Okay, so if that piece of news about Bitcoin isn't enough for you, hey, there is even more news about Bitcoin this week. From the Securities and Exchange Commission, September 20th, the SEC has approved BlackRock's ability to write options against their IBIT ETF. So now the SEC is thawing their ice in regards to the trading of options. Listen, BlackRock is the big dog. BlackRock is the one with all the influence. So, but I'm sure that the others are going to follow right along with it. And again, this news is taking Twitter by storm. Options approved. SEC has just granted accelerated approval for the listing of trading of options on IBIT. Also tweeted the following: I'm assuming others will be approved in short order. Huge win for Bitcoin ETFs, as it will attract more liquidity, which will in turn attract more big fish. This is a nice surprise regarding the timing, but not a shocker. Okay, so this is not particularly surprising news for a certain segment of the market. They expected that this would happen eventually, but now it just kind of, makes it real. Now, it's important to point out that this is just the start of the process of getting the options approval, passed. Important note: this is just one stage of approval. The OCC and the CFTC has to approve as well before they officially list. Okay, but it's going to happen. Now, BlackRock is so enamored with the potential of Bitcoin now, they're recommending an allocation of 84.9% of Bitcoin in equity and bond portfolios. Now, honestly, I didn't bother to read, the fine print in this article. What do they mean? I'm sure they're not saying you should have 84% of your money, in Bitcoin. That would just be plain stupid. But obviously, they think you should have a large exposure to Bitcoin. Okay, so this has been a really big year for Bitcoin adoption by institutions. Okay, so we talked about the article out of Forbes. We talked about a few key points out of the BlackRock report itself. We talked about the approval process of options trading on BlackRock's Bitcoin ETF. But there is even more news out this week about Bitcoin. BNY Mellon, the world's largest bank, with $21 trillion in assets under management and $48 trillion in assets under custody will begin holding Bitcoin. As part of a broader federal update on Monday, Chris Land testified that the SEC and thus likely other regulators have cleared the way for the BNY to provide institutional custody of digital assets. Okay, listen, no matter how you slice it, Bitcoin is maturing. Okay, now this is good and bad, right? On the one hand, it can only be good for the price of Bitcoin. It can only help propel it, as institutions are starting now to take it not only seriously, but it's become a favored asset class. Now, the downside is the more that these big guys get involved with any financial product, the more they want to control that product. And the big allure of Bitcoin and other cryptos for those of us who are fans of personal freedom are the ability to preserve our personal sovereignty by living outside of the traditional financial system. And the more that companies like BlackRock, get their tentacles into this guy, the more likely it is that at some point along the way, they're going to find ways to control it, which is, anathema to us freedom seekers. We do not want them involved in now. Bitcoin is decentralized and there's, it's not that easy to control, but if anyone's going to try to control it, it's these guys. Now, I'm not a financial advisor, so I do not have the credentials to make any kind of, recommendations. But let me just tell you that, if you're not considering having at least some exposure to Bitcoin, I don't know why you're not. Even if it's just a little bit, even if it's just couch cushion money, I think you should consider putting something in Bitcoin. But whatever you do, please do not buy their silly Bitcoin ETFs. Don't fall for that. If you want to own Bitcoin, own it directly. Because if you buy a Bitcoin ETF, guess what? You don't own Bitcoin. Okay, they own it. They control it. So if you want to own Bitcoin, go to an exchange and acquire the Bitcoin directly. And after you acquire your Bitcoin, I strongly, not financial advice, but this is life advice. Okay, do not hold any of your crypto assets inside of an exchange. They're called exchanges. Okay, exchanges are for exchanging. They're for buying and selling. They're not for holding. We've had tons of horror stories of, exchanges that have disappeared or for whatever reason, your crypto assets, were stolen from you. Don't hold any assets on your exchange. Instead, now if you want to hold a little bit for the sake of convenience, or if you have a small amount, I guess that's one thing. But if you have a substantial amount in cryptos, put it on these guys, okay? This is the only real way to keep your cryptos safe. Anything you're sitting, on an exchange, just understand those assets are at risk. And if you're comfortable with that, well, I guess that's up to you, I guess. So in the end, what do all these wonderful pieces of news on Bitcoin mean for Bitcoin and for the crypto market in general? Well, I think it can only be bullish. I think my guess is that Bitcoin is going to have a very nice run here soon. Just watch that 73,000 level. But if it cracks 73,000 and makes a fresh new high, watch for fireworks. And as we all know by now, Bitcoin sets the tone for the entire crypto industry. So we could be in for a very nice, maybe even insane, bull run in the crypto space. Now, a lot of cryptos are garbage, okay? So you can't just buy, a crypto at random, do some homework. But in aggregate, the entire crypto space is going to be dragged along for the ride by Bitcoin. But what was really illuminating for me there was BlackRock's attitude toward the U.S. debt crisis and toward the U.S. dollar. Okay, they're saying the same thing that I've been telling you guys, that the U.S. dollar is in serious trouble and that our government has been completely mismanaging our finance. The rest of the world is looking at the US dollar and they're looking at the United States government. They're looking at America and they're laughing at us. Actually, I don't know if they're even laughing at us. They're probably saying, hey, man, this isn't funny, because you're screwing up the rest of us. So remember the mantra on this channel: reduce your exposure to your bank, put some of your money into gold and silver, and establish streams of passive recurring income. And I guess I should add, buy a little Bitcoin, on top of it. Please like, subscribe, and comment. Ed Anderson, live from Minnesota, signing out.
Copy that.